You need working capital to go after international business opportunities. But those opportunities can sometimes tie up your cash or credit. For example, when customers ask you for a performance bond.
What can you do to keep your working capital free? On this episode of Trade Talk, we'll show you how to make money appear out of thin air. We talk to hundreds of companies every year, and working capital is something that comes up all the time.
Especially when it comes to the questions of what to do about performance bonds. When customers ask for a guarantee that if you don't perform the contracted work, they'll be compensated financially.
In those cases, the bank provides the bond, usually in the form of a letter of credit. And you, as the exporter, have to put up the collateral for that letter of credit, which can be in the range of 10 to 25% of the value of your contract.
Here's an example to make this clear. Say you have a $1 million contract. If your bank puts up a letter of credit for 20% of that, that's more than $200,000, which means you need $200,000 as collateral.
And that money has to come from somewhere: working capital, cash reserves, or a line of credit. That might not be a problem for a small contract, but what if you're bidding on a big contract? Or what if you're bidding on a number of contracts at the same time? What if you're waiting to be paid for work you've already completed?
Contract to contract, it can add up. Before you know it, you've reached your credit limit or you've drained your reserves.
The good news is there's a tool companies can use to help keep cash and credit free. It's called a Performance Security Guarantee, or as we call it, PSG. When you qualify for a PSG, EDC guarantees your bank's letter of credit so that you don't have to put the collateral yourself.
Companies use PSGs all the time, like this one.
The banks, want to see you grow your business, want to see you do these contracts and these projects, and move out into new markets. And really, what EDC does is deliver them the vehicle to help their clients through the PSG point, because naturally the bank would is going to face the same limitations that anybody else was with in terms of providing a lot of bonding support to a company. Eventually you're going to run out of capacity, the ability to provide that support. So really what EDC does, it helps not only the clients like CHC, but it also helps the banks, frankly, better deliver a service to their clients and reduce the liquidity pressure.
You can apply for a PSG one project at a time, or for an account PSG, which gives you a year-long pre-approved limit to cover all your bonding needs.
An account PSG is really flexible, just like a revolving line of credit. In that case, the fee is fixed and you pay per contract. It's easy to use and you always know how much you have available to guarantee your bonds.
So there's a way to post performance bonds without tying up cash or credit: a performance security guarantee.
EDC has more information about PSGs on the web. Stay tuned for our next Trade Talk, where we'll discuss the ins and outs of exporting to the US.
Until then, keep talking trade.